Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland, Como Lafoy. Today is the 8th of July, 2025. All right, thank you to those who have already subscribed to our YouTube channel. We're amazed by the support that we are receiving here. We're only like 2 or 3 months into this channel, and we've been getting excellent feedback. Our business has grown considerably, particularly with our consulting clients that we work with here in Canada. All we ask for you is completely free to subscribe to this YouTube channel. We give away a lot of information here. If you are interested in getting a little bit more of our premium information, you can subscribe to our premium subscription. It's only 99 bucks a month, which works out to less than 1,200 bucks a year. I think that's probably the most value that you'll see in the industry here in Canada. And to subscribe, all you have to do is go to CanadianAgMarkets.com/subscribe and hit that subscribe button right there, just to give you an idea of what we talk about in some of our reports. You can see our last weekly report here on the screen. We did talk about global fundamentals, what's happening in Europe and other parts of the world as far as dryness concerns and things like that. We also, which is pretty much exclusive to our consulting customers, we generally talk to them specifically about their farm needs and about how their risk management strategies work in association with their cash flow needs and their delivery needs and all that kind of stuff. So, in some of those conversations that we've been having over the last week or so, we actually put together some of the strategies that we've been talking to our clients about, put it in this weekly report so that you can at least have some insight into what we talk about with our consulting clients. So, for 99 bucks a month, I think that's a great deal, probably the best value in the industry as far as we are concerned. And again, go to CanadianAgMarkets.com/subscribe and you can get all that content there. If you do that, I will send you this last weekly report so that you can browse over the strategies that we did recommend to Canadian farmers. All right, getting into futures markets today, we saw canola up $7.30 to settle at 704.10. Canola actually started the day off in the red and rallied back nicely into the day. We're going to talk a little bit about that in a second. Minneapolis wheat down 8 cents at 649. Actually had a weaker day than we would have expected today based on the crop condition ratings yesterday, but we'll get a little bit into more detail there in a second. Kansas wheat was down a nickel at 522.5. Chicago wheat was down 3/4 of a cent at 547 3/4. Soybeans down 3 1/4 cents at 1017.50, testing some support there. Bean oil down 14 points at 54 cents a pound. Corn down 5.5, got a 3 in front of corn now, 3.98 against the September. Canadian dollar basically unchanged, 73.10 at the moment. Live cattle continues its rally here. Live cattle 219, almost 213 a hundredweight. Feeder cattle 319 and a quarter. Really good performance from the cattle futures today. All right, let's get into some November canola charts. Now, we did test some support here. Time to get my trusty laser pointer out. We did test some support here today. That could be a reason why it rallied. We saw a couple of days of weakness here, particularly as we came out of the July 4th holiday. That brought it down to this 50-day moving average and, kind of that new trend line that was put in after the low at the end of June here. In our report this morning, this again goes out to our premium subscribers. We actually outlined a bit of a bullish re-entry strategy for canola prior to the rally, actually. So these are the types of things, again, that our premium subscribers can get. Now, again, these aren't considered recommendations. We just want to point out possible strategies for those who are interested. We know that some people are interested in a little bit more risk on, or a little bit, of the ability to kind of play the market a little bit or play inside the spreads, things like that. So we do touch on those in our reports. And again, you can get those with our premium subscription service. So that's just something we pointed out. Again, this market could bounce back to the 730, 735 area if this test of support holds. It is bucking the trend in a lot of the other commodities. I think that has a lot to do with some of the dryness concerns in Western Canada, as well as the tight supply in Western Canada as well, coming out of the 2024 crop. These things are all old news, for the most part. But we are still seeing strong deliveries into the crush plants at this time. We're seeing strong crush performance. We've seen even strong export performance of canola, even given the limited amount of supply. So, this canola market is behaving a little bit more bullish or a little bit more favorably than some of the other markets at this point. Uh, Minneapolis wheat took a little bit of a spill today, as I mentioned earlier, down 8 cents. Again, we kind of talked up spring wheat yesterday after the crop condition ratings, um, and it did not perform as expected. Part of this is the general weakness in wheat. However, Minneapolis wheat actually outperformed or underperformed the rest of the winter wheat complex or the rest of the wheat complex today. We saw smaller gains in the Kansas and the Chicago markets. Kansas is moving towards testing previous lows, where I'll go back here and look at Minneapolis here. Minneapolis is a little ways off of that, obviously. So it still is elevated in relation to the winter wheat classes, but it did take a little bit heavier losses today as the winter wheat kind of moves towards support. Now, what could be affecting winter wheat? I think some of the big condition rating drops were seen in some of the areas that may not necessarily be hard red spring wheat country, right? So, this is the state of Washington, for example. It saw a reduction in crop ratings. Also, Minnesota saw reductions in crop ratings. They do grow spring wheat there, but not necessarily the hard red spring wheat that we would normally see. Also, we saw reductions in South Dakota. So really, the reductions in North Dakota, which grows about here, I'll show you the next slide here, about 51% of the crop, right? So this is the most important section of the US for spring wheat, particularly hard red spring wheat, which is hedged off of the Minneapolis futures. And as you can see, this part of Minnesota as well kind of encompasses, could be an extension of the North Dakota crop. So again, yes, we saw a 3 point drop in the crop condition ratings yesterday for spring wheat, but it may not have translated into the hard red spring wheat market like we would have liked it to. Here's kind of just a map of the drought areas for spring wheat. As you can see, there's the western area of Nodak is still a little bit dry. The northeastern area is still a little bit dry. And then those areas, in Washington and Idaho and Montana, those are all dry as well. Spring wheat also, Durham wheat is reflected in spring wheat numbers as well. There's a lot of Durham grown in Montana as well. So that may have been affecting the numbers negatively as well. All right, let's get into the corn market because I think this is one of the more interesting ones today. We saw corn punch hard to a new low today. A little bit of a danger zone, I would say. And, it's just hard to make a case here to rally corn other than the fact that we might at some point get to a spec short position that they want to cover or at least take some profits in. Other than that, there isn't a whole lot to say that is bullish about corn at this point in time. Condition ratings did add 1 percentage point yesterday. Now sitting at 74% good to excellent. We showed a chart in yesterday's video, so I won't rehash it here. But we did see, some big corn states like Iowa here up 1%. They're kind of leading in the good to excellent rating here. So very important state. Even Illinois has high crop condition ratings, although we did see a drop in crop condition ratings there. A big concern here is Nebraska, which is relatively dry. I'll show Iowa produces 16% of the U.S. corn crop. It's the largest of the corn producers. Nebraska is no slouch either, and Nebraska saw a 2% decline, and Illinois also saw a 3% decline. So again, these two states, Illinois and Nebraska, make up 26% of the U.S. corn crop combined. So it's nothing. It's not nothing. But still, the rest of the continental U.S. is making up for some of those lower ratings. Here's what we're dealing with, though. I do follow an analyst. His name is Michael Cordonnier or Cordonier or something. I don't know how to pronounce his last name. Very good stuff. He puts out some really good yield analysis on corn. I think he's pegging the corn crop right now at about 180 bushels per acre. But he also has an upside bias on that up to 184. So just to give you some context of what this looks like, this is, if we saw an 180 bushel corn yield, that would be a record corn yield in the U.S. with an upside bias, and the upside bias that he has right now is up to 184 bushels an acre. That's what this chart of US yield would look like under 184 um, 184 bushels per acre. Another data point or another analyst that I follow is Karen Braun from Reuters, and she runs a program with about 11, I think, different farmers across the Corn Belt. This is where they are. She kind of tracks the yield, the crop condition ratings, and they report to her every week. And so she gets a good wide swath. It's not necessarily statistically relevant because of the small amount of participants, but I think it still is interesting to watch because there is a wide swath around, the Corn Belt in the U.S. Um, if you go to Reuters and just type in Karen Braun, that's Braun, her commentary will show up in that search like that, and you can see these reports for yourself. But here's just kind of some pictures of the corn crop taken by those participants in the Crop Watch program, and they are stating overall that their crop conditions are very good. She did start asking them for um, yield ratings. And so, how they work their yield ratings is from a 1 to 5 scale, with four being well above average or solidly above average, and five being best crop ever. And currently, those 11 producers across the U.S. have rated their corn yield potential at about 4.1, or I think 4.11, if you want to be exact. So, again, very high yield expectations at this point from a lot of areas of the US Corn Belt. Now, just to kind of translate that into production, at 180 bushels an acre, at what we would call, normal abandonment rates, that produces about a 15.6 billion bushel crop. Again, that would be the largest. That would be the largest on record, even above the 2 years ago, the 2023 crop. But the really interesting thing is, if we actually get to that 184 bushels an acre mark, that would raise US corn production to just below 16 billion bushels, or 15.96 or 15.95. So when you kind of factor that in, I'll go back to the December corn chart here. Now we can kind of understand why corn is making new lows today, and quite aggressively. So again, it's always hard to call bottoms and tops in markets, but in for and the bottom of the market often comes out when there's the most bearish news out as well. Like the market writes the news, right? The news doesn't write the market. So um we are seeing corn pushed to new lows. I don't know how deep this is going to go, but it is justified at this point that we are seeing new lows in corn. Just to kind of touch base quickly on soybeans. Soybeans also saw some losses today. We are seeing it move towards support just above $10 a bushel, or 10.10. At this point, crop condition ratings have been relatively benign. The weather's been pretty good. Obviously, demand for soybeans has been really good as well, and the new biofuels laws, or the biofuel recommendations, are also supportive, particularly to soybean oil. So, not necessarily as bearish as corn. It is more range bound. I think if we do see it break below, this 10.10 or 10.11 area, and move, back towards the $10 area, I think that could spell, some risk. Maybe move it back to that 970 area as well. This is November again. So just some watch outs, although at this point we're looking for more neutrality from the soybean market. Um, just kind of looking at, in Canadian terms here, what that looks like for Manitoba soybean growers, which is primarily where Western Canadian soybeans are grown. We have seen declines in prices as well um, as we move through the spring and seeding. We did see a bit of an uptick, and I'll just kind of go back to that may have this is a week. That Manitoba chart was a weekly chart. We did see a rally here up into the 1060 area. So this, uptick in prices um, is likely a result of the rally in soybeans. Sometimes we see an uptick even when futures are flat, or when they are even declining, and that means that sometimes the basis is being adjusted to compensate for that. I don't think that's happening at this point. although basis does have a pretty big impact uh, on the um, on the Manitoba or the Canadian soybean pricing. So that's all we have for you today. Thank you for joining us. We hope that you like this channel, and again, like and subscribe if you do. And we will see you again tomorrow.